Hello and welcome to the Wendell Effect. My name is Brandon Wendell and I'll be guiding you through my view of the markets going forward for the week of the 14th of May, 2023. Just want to remind you, we are not broker-dealers or investment advisors. We're looking at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities, giving you personalized recommendations. Past performance is no indication of future results, and you got to be careful. There's always risk involved in the markets. We can never eliminate the risk. All we can do is try to minimize it. Past performance notification of future results. I think I said that already, sorry. And also, we're not subject to trading restrictions, so we can have a position of security initiate one at a time. Keep in touch with me, please. I love getting some feedback and seeing if there's anything you'd like me to talk about or, any observations you have, any feedback. You can hit me up at brandonwendell.cmt@gmail.com. You can also follow me on Twitter, please. I'm at TraderBdub. I stay active on that during the week about the markets. And of course, if you could, please hit that like button and subscribe. Helps us out quite a bit. You can find us obviously on YouTube for the Wendell Effect. So jumping into the week of May 14th for the equity index futures, basically the ES has gone nowhere again. You can see we're just kind of at the top of the sideways range, getting smaller and smaller in our motion, and we can't get any momentum to break us in either direction. So we're just going sideways, maybe getting ready to roll over and move to the bottom of the channel soon. On the daily chart, you can see we tried to rally up, and again, you see the sideways motion. I didn't draw it out, but this is almost a diamond pattern. It could be a diamond top. Let's take a look at that for a moment. So here we are with the chart, and basically what I was showing or saying is right here, we got kind of a diamond formation. Let me see, I'll do that as a ray. Right here. Oops, that's not what I wanted. Anyway, what happens is with a ray, or sorry, with a diamond top, as I mentioned, it would be a topping formation where you'd expect the prices to start reversing. It's not symmetrical, which they usually are not. You can see how we're kind of narrowing down. You know, you can kind of draw it like that. But anyway, you got this diamond at the top. That, again, is never symmetrical. In this case, we almost have a symmetrical triangle off to the right. Either way, that's a bearish signal. And usually will break down after that diamond top pattern. So that's something I'm going to be keeping an eye out for and see if we break down to start that bearish move in the markets. So we'll go from this daily chart. And by the way, we are retreating right now, so we could pull back more to some of those retracement areas. You also see momentum has been dying off a lot, which doesn't necessarily mean reversal, but we definitely don't have bullish or bearish momentum helping us break out. On the 4-hour time frame, you're seeing lower highs and lower lows. We've already gone through these demand zones, so the fresh demand is right around 40.50. There's a couple of little zones kind of tucked in on top of each other, and then the other one down at 4,000. So expect us to drift lower, but not very fast. You know, we'll get that kind of bouncing move as we go down. Taking a look at the March 13th to present, when you compare all the different indexes, the NASDAQ was the leader to the upside while the Russell was taking us down. Basically what that means is when that leader gives up and we start to fall, that's the signal that everything's becoming bearish. Well, moving forward, you can see, or actually not forward, but March 31st to present. Okay, this was, March 13th from the one move where we started moving up. When that leader gave up, and you see it did, we started dying off a little bit and really just went sideways. The NASDAQ again has taken over leadership, trying to rally yet again. I mean, this was that diamond formation for the most part where everything was moving sideways. Sorry, there's a bunch of ducks. I don't know if you hear the wings flapping, but they're jumping into my office area next to me, just outside the window, not inside. Anyway, so right now the leader to the downside is the Russell, leader to the upside is the NASDAQ. If we get more weakness in the NASDAQ, we drop, especially if the Russell starts breaking to new lows. So if you take a look at 2023 as a whole, from the beginning in January, you can see tale of two different markets. I mean, Dow and Russell are negative while the NASDAQ is experiencing a 20% rally. I don't expect this to last. It looks like the NASDAQ might, well, actually, let's take a look. You can see the NASDAQ right now is pressing up against a little bit of supply. It's got a very strong move up right now, but we should be seeing a little bit of topping out, maybe moving a little sideways to retest that trend line. And the big test obviously will be that trend line, see if we actually rally from it. We do have another overhead supply, okay, but so far this chart does not look that bad. It looks like it should be able to continue through. We're above 60, which usually means supply won't hold and we might be able to push through that area. Going into the daily chart, it won't necessarily be right away because we are in daily supply, just as we saw with the weekly. And what's happening right now is we got a divergence. Price tried to make highs and move into that supply without the momentum needed to break through. We had less momentum than before. That usually leads to a bit of a pullback in price, and that should see price pulling back pretty much to the trend line for another bounce. So this week might be a little bit bearish as we get that pullback, but it wouldn't be a very sharp move, I expect, downwards. Even in the 4-hour time frame, you can see, even though we're not getting momentum to the upside to break out, we're also not pulling back and going below 40 anymore. So without that, we're not going to see a deep dive in price. It's just going to be a very slow, gradual move downwards. We had a little bit of retracement off our big move up on the daily impulse, only 38% retracement. Started to see a little bit of buying pressure. And the last impulse, it pulled back 61.8, just kind of an overlap there. So the NASDAQ wants to go up, but it's kind of feeling the weight from the other markets, if you will. And that's why it hasn't been able to really break out. So if the other markets drag it down enough, as I said, then we'll see the NASDAQ find some weakness and just pull back a little bit to that trend line. The Dow is much weaker, as you can see. We can't seem to get above 60. We've got a couple of peaks right now below 60. That's very, very bearish. Obviously, the NASDAQ is holding it up, so it's not really breaking down to fresh lows yet. Looking at the daily chart, we are in a bearish trend. It's not a very strong one, but it's a bearish trend. I say that because we had a negative divergence for the warning sign. Trend confirmation is when you get a peak after that where you're not above 60. So if we do start to drift downwards, there may be a little bit of a bounce at that 32,784, 32,486 demand zone going on this week. I don't see us breaking that this week because, again, there's strength in the NASDAQ kind of pulling it upwards. In the 4-hour, we're just consolidating. You can see we're trying to move down, but we're not getting the momentum needed to continue that move to the downside very well. This is a tested demand, so that won't hold. So what I'm expecting is maybe a little bit of a rally, probably not a new high. We might stall out just below 33,500 and drop down to 32,848. That could be a pretty good short sometime this week. Over to the Russell. This is a very weak market right now. It's barely staying above 40. We saw that this was the leader to the downside. So if you're looking for shorts, the Russell's probably the best one to look for those shorts. So we're definitely seeing a fight to stay above 40 as prices are trying to break down. Right now, it looks as more of a shorting opportunity where we end up testing this multiple times this week before we push below. Or actually, no, this is weekly. We're not going to do that this week. But that's our downward move and our next bouncing point, 1643. On the daily chart, we had a little bit of divergence where price is trying to make a new low. We didn't really support it with momentum, so it'll be interesting to see if we put in a low right here on the daily chart. That was Friday's low. If that becomes a low and we're not below 40, we could actually pull back a little more, but I'd be looking for shorting opportunities right here around that 1865 to 1890. That's your supply right there with good selling pressure. That'd be a great entry for a short, targeting either the projections or the demand zones moving forward. And on the 4-hour time frame, we have lower highs, lower lows. This is bearish, no doubt about it. Definitely very bearish. I don't see how that demand zone holds. We might get a small bounce and retracement there, but I'm going to be looking for shorting opportunities really on the Russell, especially if the NASDAQ finds some weakness. So that's what I got for you. If you got any questions, let me know. You can hit me up again on email at brandonwendell.cmt@gmail.com. You can also follow me on Twitter at TraderBDub. And please hit the like button and subscribe. Helps me out a lot. And continue to provide you with more information on a weekly basis on YouTube for the Wendell Effect. So until next time, everyone, trade safe, trade well, and take care. Thank you for being here.